Hi, this is Andy Filipiuk in Toronto for the week of August the 30th. As we head into the fall, investors need to be cautious. September and October have traditionally been very volatile months for equity investors, and I think this time it may be no different. Looking at the current economic situation, there are two sentiment indexes, the University of Michigan and the Conference Board indexes, that measure individual sentiment, and they have both turned down sharply recently. Now, I've included a chart of the Michigan Sentiment Index, and it's a very good indicator, or leading indicator rather, of economic activity. Consumer spending is roughly 70% of the economy, so when this index turns down sharply, it's quite possible we could be looking at a real economic slowdown. Some of the reasons are obvious. The inflation rate is making it harder for people to buy. You've got a wearing off of the stimulus benefits that we've seen. And with all the COVID uncertainty, it makes sense that people are pulling in their horns somewhat. So this is a real possibility that we see the economy slow down this fall. Now, I've looked at the S&P 500. Currently, it's at 4,522. And it has earnings, 12-month trailing earnings are 132.13, giving it a earnings multiple of 34.22. It's actually higher than that if you look at the most recent earnings. It's around 38 times earnings. Now, this is very expensive historically because the multiple has usually traded in the high teens. So we're trading at double the rate at which equities normally trade at. And it's understandable, given that bond yields are so low, there really isn't any alternative to stocks for many large institutions, pensions, hedge funds, etc. Now, the problem is if earnings start to slow, we have a real problem with the stock market. I've taken an example, and you can see this on the cover page of the video. If I decrease the earnings 10%, which takes it down to about $118, and we lower the multiple from 34 times to 25 times, which is usually what happens in a slowdown. The multiple the market will pay for earnings drops significantly. You can see this could result in a 34% drop in the value of the S&P 500. Again, just with a drop of 10% in earnings and a contraction in the multiple. So investors have to be very careful here because a downturn, everybody's sort of sitting on one side of the boat, heavily weighted in equities, and that could turn if the sentiment and the economy starts to head south. Thanks for watching.